business here on Business Morning. Good morning and welcome to the Thursday edition of Business Morning here on Channels Television. I'm Ini John Mekwa. Let's start off with oil prices. And what's going on in oil prices is that today it rebounded in Asian trade after slumping to their lowest level this year in the previous session, though concerns of economic slowdowns, weakening fuel demand, continue to cap gains. Brent crude futures were up 70 cents, which is 0.9%, at $77.87 a barrel, while U.S. West Texas Intermediate crude futures gained 74 cents to $72.75 a barrel. Brent had settled on Wednesday below the year's previous closing low, touched on the first day of 2022, while U.S. West Texas Intermediate crude futures had fallen to a fresh yearly low. Helping to lift oil prices was data showing that Japan's economy shrank less than initially estimated in the third quarter, loosening COVID-19 restrictions in China, among the biggest crude oil consumers in the world, also aided in steadying oil prices. Meanwhile, Western officials are in talks with Turkish counterparts to resolve oil tanker queues off Turkey. At least 20 oil tankers continue to face delays to cross from Russia's Black Sea ports to the Mediterranean as operators race to adhere to Turkish rules. Still in the markets now, Chicago wheat climbed on technical buying on Wednesday after sliding to a 13-month low earlier in the week as global supplies weigh on U.S. markets. Soybean futures inch higher, underpinned by export demand optimism and dry conditions in top exporter Argentina. Corn inch higher, supported by wheat and soy, despite from weaker crude oil. And the most active wheat contracts on the Chicago Board of Trade climbed 25 cents to $7.54 a bushel. Back in Nigeria, the Nigerian Exchange Group, the NGX, has held the 2022 edition of its Made of Africa Awards. The hybrid event, which was held in Lagos, is aimed at rewarding organizations and individuals that have exhibited excellence in value creation and impacts on the Nigerian capital markets.
Tagged Innovation in Capital Markets, the panacea for exponential growth, this year's edition of the prestigious award, hosted by the Nigerian Exchange, brought together key stakeholders in the capital market to recognize their outstanding performance in multiple categories.
You're welcome.
The event had in attendance several important dignitaries, including the Executive Governor of Edo State, Godwin Obaseki, who gave a special remark at the occasion.
The importance of the capital markets cannot be overemphasized, particularly at a time like this, when we seek to rebuild our country from the ruins of the past. We must all work together to ensure the existence of a fair, transparent, and efficient capital markets.
Then comes the much-awaited moment, the awards presentation.
If we could have you center stage for the photo, please.
Chairman of the NGX Group, as well as the CEO of NGX Limited, expressed satisfaction with the outcome of the annual event.
Awardees is based on verifiable data that was verified by a third party, PwC. So I'm very satisfied with the process and with the outcomes. And I congratulate all the awardees.
I think the big thing that we'll see is we expect more products, we expect a diversified set of products, and the award should reflect that. We also hope that there'll be a lot more listings by this time next year. There's an incoming administration. We hope that that also brings, on top of the gains that we've had, a lot more listings, a lot more transactions in the capital markets, and the award should reflect that.
Established in 2012 as NSE CEO Awards, the Made of Africa Awards have been reviewed to reflect the dynamic nature of the market and promote inclusivity following the successful demutualization of the Nigerian Stock Exchange and the launch of the NGX brand.
All right, well, congratulations to NGX on that event. Now let's go to business. And one business we're talking about today is taxing for development. The corporate Affairs Commission recently posted that less than 20 million out of 68 million active businesses in Nigeria are active taxpayers. Nigeria has one of the lowest tax to GDP ratio in the world, just about 3.6% as at 2019. And although Nigeria also raised 3.4% of GDP from non-tax revenues, such as oil, in the same year. Now, the Senate has passed for second reading a bill to amend the Federal Inland Revenue Service Act. The proposed law is supposed to regulate the processes of granting corporate tax holidays, import duty waivers, and investment incentives to investors and businesses in Nigeria. Can this make a difference to this low GDP or tax to GDP number that we have in the country? We have Dr. Vincent Ahonsi, is the country director of Oxfam, joining us from our Abuja studio. Good morning, Dr. Ahonsi. Thank you so much for your time this morning.
Thank you so much for having me here.
All right. So what are your initial thoughts about this attempt by the Senate to, reduce the power of the federal government in giving out waivers and tax holidays? Will this really boost, will it expand the tax nets? Will it expand the revenue of government from tax, do you think?
Thank you so much. We need to look at this. This is not the Senate. I am not speaking for the Senate, but I do not see it as the Senate trying to whittle down the power of the government in giving out tax rebates and tax incentives. But we need to look at the background. What is the context of Nigeria? About 3 months ago, the medium-term expenditure framework and the fiscal strategy paper were presented to the Senate's Committee on Finance. And in that document, the Honorable Minister of Finance made it known that the proposed budget for 2023 is going to be in the region of 19.7 trillion naira. And out of that, over 12 trillion naira are going to be by deficit. Simply put, that they are going to be by borrowing. Nigeria does not have the money. And out of that 12 trillion or over 12 trillion, 6 trillion are going to finance petroleum subsidy. Another over 6 trillion are going to be for tax incentives, tax waivers, import duty waivers. If you look at that, one, the volume of money that Nigeria is going to lose by giving tax incentives is so mind-blowing. And for a country that is already losing an estimated $2.9 billion US on yearly basis to tax waivers, to corporations, to tax holidays, to tax incentives to wealthy Nigerians, this is a welcome development. Nigeria is currently having serious financial and fiscal issues. We cannot run away from it. And what the Senate has said is that you cannot continue to give tax incentives. These are the tax revenues that Nigeria need, with a tax to GDP ratio of just about 3.6 for the year 2019. Nigeria has one of the lowest in the world, if not the lowest. And we are now saying that let Nigerian government stop giving these tax incentives to the rich and to the powerful, to the corporations. These are revenues you need in a country where over 20 million children are out of school. Less than 40% of the population have access to quality health care. This is not the way to go. Our food system is broken. Now, over 19 million Nigerians are acutely food insecure.
All right, Dr. Ahonsi.
So giving tax incentives is not the way to go.
All right, Dr. Ahonsi, I believe, in the corporate world, we certainly have to look for a balance, because these tax holidays and waivers are also supposed to encourage investments in corporates. These are the guys who create the jobs. These are the guys who also bring the revenue. So it's not like they were just being given for nothing. The tax waivers and holidays and tax holidays were actually created to encourage corporates to come on board in the country, create jobs, mop up unemployment, also encourage them to also, have their production and reduce production costs for them. So I believe there's a need for a balance somewhere in there.
Unfortunately, the context is not what we are seeing. The spirit behind that legislation, so to speak, is that when these incentives are given to the corporations, they come back again with whatever they have gained or profit and plunge it back into the system in terms of financing education, financing healthcare, financing agriculture, and financing social protection. But that is not what we're getting. That is one leg of it. The gains they are getting from these tax incentives are not being plugged back into the social good, into common good. That is one leg of the argument. The other one is that the system is not transparent. The Senate has not said anything that is a big deal here. They say for you to request for a tax incentive or a tax holiday or a tax waiver, you need to come forward in a transparent manner, provide the justification for it. Let Nigerian populace, through the instrument of the legislature, be able to scrutinize what you are requesting for. Nigerians will be able to say, okay, through the legislature again, whether this is legitimate, whether this is appropriate, whether this is something that could be granted. Not what we have now that is quite hidden, quote and unquote, and it is not open to scrutiny, and it's open to my practices. We cannot say for certainty that these are the people being given these tax incentives, which they propose to amount to about 6 trillion naira. That is a lot of money. And the Senate say, okay, throw it open. We want this to be scrutinized. We want it to pass through legislative, scrutiny, approval before the executive goes ahead and implement it. And that is very legitimate. You cannot continue to have the top 1% continue to feed fat on the bottom 99%. The system will not just work well.
Yeah,
there's no country that continues to... yes, please.
So from what you have said, I mean, one can say, what's the assurance that the introduction of another layer of scrutiny, being the legislature, is going to bring transparency, to the system? Because we live in Nigeria and we've seen or heard at least processes that have a lot of bureaucracy and still is not transparent. I mean, even when we talk about constituency projects, which comes from the legislature, there's still a lot of unanswered questions. So what is the assurance that with another layer of scrutiny or bureaucracy, it's not just going to be another party to settle? Shouldn't it be, maybe a law that will affirm or compel the corporates to follow through with what they have promised to do?
The argument is quite legitimate, but I will let you know that one thing that we need to think of here, as stakeholders, we do not see this legislation or this proposed bill as the end to the mean. It is not the end, it's the beginning. We want to see a situation where there will be a total cessation, a total phasing out of tax incentives. So it's not a case of this is going to be the end. This is the beginning. Just the same stamina, the same energy that the government is putting towards phasing out, fuel subsidy is the same energy we expect the government to put towards phasing out tax incentives, because it only goes to a few, top 1%. So opening it up for the legislation to be able to scrutinize it is a transition, it's a work in progress. We do not see it as something that is going to, it's better than where we are coming from, where you and I cannot really say those who receive these tax incentives, what they receive it for and what they use it for, and we cannot see what they are doing with the gains from those tax incentives. Nigerians are not getting better for it. Nigerians are getting poorer for it. We have 133 million Nigerians now that are in the poverty bracket. That is not the way to go. For a country where we say by 2025, we are going to have poverty and we are going to eradicate hunger. I don't see that happening in the next 3 years. We have to start thinking forward. Nigeria cannot continue to borrow money to refinance its debt service, and at the same time thinking that borrowing will take us out of what we have. You told us the country is rich. Thank you. But for those of us who are lucky and who are fortunate to be educated, we know there are problems. There is no good prospects for our fiscal responsibility and our fiscal space for years and years to come. What we are going to bequeath on our children and our children's children is going to be an unhealthy economic and fiscal environment. And the way to start to prime down that, one, is to see how we could widen the taxation space, how we could have more of production, how we could have less of consumption, how we could have more of innovation in ICT. That is the way to go. As of present, the only tax that Nigeria is able to track or is able to capture is just about 12% of accruable tax. Why can't we widen the gap? Now we have over 4,960 Nigerians whose assets and wealth is about or over $5 million US. We have about 450 Nigerians with more than $50 million US. And we have Nigerians who have more than $1 billion US. All we are saying is, why can't we think inwards? One, apply a wealth tax of 2% to Nigerians who have over $5 million US. Apply 5% wealth tax annually to Nigerians who have over $50 million US, and apply 10% annual wealth tax to Nigerians who have over $1 billion in assets. Then we will be raising over $6 billion US from that alone. And if we are able to plug the loopholes that we have in these tax incentives, that will save Nigeria another $2.9 billion estimate. And from both of them, we are talking about close to almost 7-point-something billion US dollars already. These are the revenues that the country needs. Then we have to look at our income tax, our corporate income tax. We think that one is good at 30%, but personal income tax still needs to go up for the top flight earners to at least about 28% or 30%, which is the average for other West African countries.
All right, so
Dr. this is the way to go, my sister.
All right, Dr. Vincent Ahonsi. Obviously, Oxfam has been doing a lot of calculation and strategizing on taxation in Nigeria, and tax management remains a big deal for the country. But as you have noted earlier, one of the biggest challenges in the system is transparency. So even when we have all the calculations, getting people to be transparent or getting the system to be transparent remains a challenge and a bottleneck to achieving all of those numbers you have noted. But thank you so much, Dr. Vincent Ahonsi, Country Director of Oxfam, for sharing your thoughts with us this morning.
Thank you so much for having me.
It's commodities time, but we'll take a breather first. And it's commodities time here on Business Morning with Dumebi Oluwole joining us here in the studio for the second time this week. Hi, Dumebi. Good morning.
Hi, good morning.
So a lot of commodities are in the news. When we saw wheat in the news, we saw corn in the news. Cocoa is also still in the news. And the harvest season is at its peak at this time.
Yeah.
So what's going on in Nigeria?
I mean, it's like the period for agricultural commodities right now. During Q4, at the end of Q3, entering into Q4, it's typically the planting season the harvest season for quite a number of commodities in the country, and that's why during like that's why during that period, that's the end of Q3 entering into Q4, we see that commodity prices tend to, decline. People can buy more commodities at the time. Yeah, but this year, we've had the issue of the flooding. We've had the fact that farmers are not able to go to their farms, insecurity as well. So generally,
the Ukraine war
exactly into the imported commodities as well. So just we have like so many a myriad of issues affecting the amount of affecting agricultural output output, and that's why prices are still higher in the commodities market. So even if you see price of a commodities like maybe Gary, maybe it has declined a little bit. I mean, when you look at the quantity you're even still getting for that particular, for the price, and when you compare the price to last year, this time last year, you see that there's still a significant difference from what it was and what.
Rice, which is a staple, especially at this time.
Yes, during the festive period. So typically during the festive period, we see that prices are even still, even though there's the harvest season effect, some prices are still higher for commodities like rice, tomatoes, and that's because during the festive season, demand is usually a lot, and prices are higher. So it's just basic supply and demand dynamics. When demand is higher, you see that prices trend upwards, and that's typically the case. So with the typical festive season, increase in demand and shortages, stemming from the supply side, we're seeing that prices are still high and could even trend higher for commodities like oil, proteins.
That's palm oil?
No, groundnut oil,
okay.
Vegetable oil. So commodities like that, palm oil as well, because some people have seen that there's an increase in the shift in demand from vegetable oil to palm oil, because palm oil right now is cheaper, relatively cheaper than than vegetable oil. Yeah, relatively cheaper, because the price is still higher than what it was last year, but compared to vegetable oil, it's still a cheaper option for households. So we could still see an increase in its price because there will be an increase in demand during the festive period. So generally, commodities like rice, tomato paste as well, pepper, onions, palm oil, vegetable oil, their price could remain high during this period.
Yeah, when you talk about tomatoes and pepper and all those perishables, I know that the fact that we do not have a very developed preservation system also fits into it.
Yeah.
Is that helping at this time?
I mean, it's not, especially with the fact that when we think of the effect the flooding had on Nigeria's ability to, plant and even harvest as much, a major thing that would have been able to mitigate against this problem would have been if we had substantial and adequate storage facilities, storage infrastructure for a lot of these commodities. I mean, it's no longer news that Nigeria loses about 45% of its tomato harvest due to poor storage facilities, amongst other issues like, what happens when, during transportation. So generally, you have that issue, but poor storage facilities also affect that. Then you look at a commodity like onions as well. We lose about 50% of our onions produced on an annual basis because of these poor storage facilities. So generally, when you look at it, you see that the from production to how it gets to the consumer, the in-between aspect, that's the value chain of the commodities, are still largely underdeveloped. And Nigeria's value chain for agri-commodities is estimated at $85 billion. So meaning that we could actually be tapping into that if we have the infrastructures in place to ensure that we're not losing, money. Instead, we're making money by tapping into the valuation of all of these commodities. So for our Greek produce right now, the theme is to improve our productivity. And agricultural productivity is the ratio of inputs to outputs. How much of our inputs are going in, and the quality of the inputs that are going in, the magnitude of the inputs that are going in, and the quality of it will determine the quality and magnitude of our output levels. But when you look at the fact that our input materials are receiving a lot of shocks from structural deficiencies, from insecurity, from all of these things already disincentivize farmers to even produce more, and that's affecting our output levels. Over the years, we've seen that Nigeria's agriculture, the share of agriculture to total employment has been declining, and still is Nigeria's largest employer of labor. But when you look at the trend from 1990s to today, it has declined significantly. Between 1960 to 1969, it was about 57%. Today, it's just about 25%. It's just about 30%. And when you also look at the fact that agriculture's contribution to GDP as well has also declined, significantly from about 57% within that same period to 25% 25%, to an average of 25% today. So generally, we see that agriculture has been neglected for a really long time. Yes, we've heard lots of talk about it, diversifying the economy, going back to agriculture, retracing our steps, but still we're not seeing the action. We're still not seeing the impact of it on the economy. Yes, there's a time lag when it comes to the implementation of policies and when it eventually takes full effect in the economy. There is that time lag, and especially with agricultural commodities, that the prices are really volatile. It takes a lot of time. When you plant a commodity, for example, you plant cocoa, it takes a lot of time before you can actually harvest and then reap the fruit of your labor. But are we even able to plant as much? Are we able to even plant as much?
No, I'm talking about, you talked about the policy implementation.
Yes.
You talked about the time lag. Everybody knows that there's a time lag from when you begin the implementation and when you feel the impact. But the issue here now is, are we planting these policies, or we're just talking the policies, which is what we would like, the challenge we like to pose to all the candidates, political candidates that are out there with their manifestos. We see manifestos everywhere, so these policies, what is the plan, the implementation plan? It's not just on paper. We have a lot of that. We can Google it and find it. You know what I'm saying? But maybe we really have to thank you so much for drawing our attention back to that issue of agricultural productivity. We do have the population, we have the markets, we do have the resources, but connecting these two
together has always been a problem for us.
For Nigeria, and we hope that someone will come in and do that connection for us as the leader of this country. Thank you so much, Dumebi.
Thank you for having me.
Let's take a breather. We'll be back with another conversation. This one you would like, because it concerns how much can you withdraw in a day, in a week. The CBN has that new policy. Find out another perspective after the break. So what's your plan to spend, at least when it comes to physical cash, just 100,000 naira in a week, 20,000 naira a day? That's how much you can access from the 9th of January. From ATMs and POS, and then over the counter withdrawal also. Then if you're a corporate, you get 500,000 naira. How will you cope with that? Well, one of those concerned with this will certainly feel the pinch of it, positively or negatively. The Association of Mobile Money and Bank Agents in Nigeria. We have their president here, Mr. Victor Olojo, joining us here. Hi, Mr. Olojo, good morning.
Good morning.
Okay. So, are you happy about this announcement?
We're very disturbed and happy. We're happy and disturbed. But, I mean, mixed feelings.
That doesn't relate.
Yes, it doesn't really, because we understand the objectives of the CBN. I mean, they're trying to see how the economy can be fixed. But the jobs of 1.4 million mobile money agents is at risk right now. Because what it means is that all we have right now will be a 20,000 naira deposit or withdrawal that we are allowed to take from the bank, right? So we cannot use that to sustain our business. What that means is that all we have as mobile money agents in rural areas where there are no banks, where there are no ATM, right? So an agent cannot serve the public with only 20. An average agent serves about a minimum of 20 customers a day. And let's just say, with this peg that the CBN has released, an average agent would need about 400,000. So what we're actually appealing is that the CBN should give a somewhat recognition for agents through our principles, where we can have access to cash and serve Nigerians in areas where there are no banks and ATM machines.
So your challenge here now as a mobile money agent is how you will access cash to serve your customers.
Absolutely.
It's not about the customers withdrawing more than 20,000 a day.
Yes, so the reality is that the objectives of the CBN is something we're happy to align with. I mean, over the past decade, mobile money and bank agents have been working consistently with CBN through the banks and the operators, the PSB, the super agent, and all the other fintechs as licensed by the CBN. Now, the point is, we need to drive more wallet transaction, but Nigeria as an economy is still more cash dominant. And that's why we are very thankful. I'd like to use this opportunity to appreciate the Senate. I mean, they are the conscience of the country, custodian of the country right now. What do I mean? I mean, it was raised in the Senate. We are happy because if this policy should continue, I tell you that Nigerians would suffer. There are many locations. Okay, why? So the picture is simple. Nigeria as a country is still very cash dominant. Right. Now, the technology that the CBN is encouraging all of us to go into is still not perfect. We still have issues of fake alerts, failed debits. Sometimes you make transfers and it reverses. Sometimes the POS you have in the filling stations, the pharmacy, the shops are not going. Sometimes you are debited twice. And sometimes in trying to retrieve your money, it takes weeks, months, and in some cases, you lose these monies, right? So the point we're trying to say is that whilst we are pursuing the cashless agenda, cash still remains dominant. Mobile money agents in Nigeria are committed to educating and sensitizing Nigeria on the other channels, electronic channels for us to drive the cashless economy agenda.
But some people would say you're just saying this because it's going to affect your business negatively.
Well, the reality is we serve Nigerians. We serve Nigerians. I mean, we've made life easy for Nigerians over the decade. Many Nigerians can't remember the last time they walked into the banking hall. Now, what this is saying is that if all we can access is 20,000, it means the ATMs will become very crowded, the banks will become very crowded, and it will become really, really difficult for Nigerians to go by their daily, livelihood and all of that.
Okay, so because everybody's going cashless, I mean, other economies, there's technology. What would you think? And some people have said, if we just sit down and wait, then the world will just be passing us by while we're still doing the cash economy. What would you think would be an ideal situation?
Okay, well, in all sincerity, like you said, we appreciate the effort of the CBN. But the reality is that the common trader in the market today does not know what e-naira is as I speak. Don't know what mobile transfer is, or okay, we have rural markets where farmers bring their produce to sell. In some cases, you don't even have any POS terminal there. What we have is cash to hand. And what we are saying is the mobile money and bank agents, over 1.4 million, we are ready to work with Nigerians to train these rural people, to help them understand and embrace these technologies. And gradually, adoption takes time. So we are willing to cover up this gap. And I mean, the progress we've made last year alone, in terms of volume of transaction value, we did over 6 trillion, which has contributed to the GDP of the country. This year, by September, we had already exceeded what was done last year. That lets you know what mobile money agents across the country are doing for the economy. So we are appealing. It's not about a selfish sentiment, but about Nigerians in general.
Don't you think that continuing in this direction will actually slow down? Maybe this will accelerate, the cashless economy.
Absolutely. I mean, we agree. But the point we are making is that the channels we are going into is not perfect yet. Many small businesses still don't trust the system. If you go to markets today, we have businesses who will insist on paying cash because of the past experiences they've had. They've had people swindle them. So it takes time for us to let them know that this thing works, but these are the other options you can try.
All right, Mr. Lojo, Victor Lojo, President of Association of Mobile Money and Bank Agents in Nigeria. We'll stay on this conversation, we promise you, as the media, because our duty here is to get everybody, everybody's perspective, and hopefully the CBN is listening and will work according to it. Thank you so much.
Thanks so much for having me.
Yeah. All right, as Mr. Lojo takes his leave, we have Anete walking into the studio now, giving us the market numbers from yesterday. Anete, I know you don't need more than 20,000 naira cash, so you're not bothered about the withdrawal limits. You just want to do your market.
Well, as far as the market is concerned, the markets will be looking at the non-cash based transaction.
So you're already E.
Thank you. the east side of the market. That's what we'll look at. So, but of course, before I give you details about the equities market, I'll be doing the fixed income market first.
Okay. Yeah, we had that auction yesterday.
Yes, the primary market auction.
Yes.
Okay, but I think our screen tells us that it's time for the stock market, the equities market. So now for the equities market, we've gained more than 120 billion naira. Now for midweek trading session, the close of Wednesday's trading session, this is what the all-share index is still making investors happy. An additional more than 30 billion naira is added to the market. And then at the same time, the market's benchmark, the market's capitalization, it has also increased, gaining about 32.58 billion naira at the close of yesterday's trading on the NGX. Now take a look at the activity chart. The sectoral performance was mostly negative, and this is no thanks to profit taking on some of the banking counters. But the savior of the market were the likes of Geregu, the likes of consumer goods, big bellwethers such as Nigerian breweries, Nestle, and Honeywell Flour. So they lifted the consumer goods sector, which was the lone gainer for the sectoral performance, while you saw a lot of some profit-taking impact on the three other counters of the market, while the industrial goods counter of the market remained flat in contrast to what it was on Tuesday. Now, let's move over to the activity chart. In terms of activity, the volume, it was down by 20.82%. Value was also down 6.02%, while deals was deeper in the red, down by 11.92% in contrast to what you had in the previous session for that market. Now, we move over to the fixed income market, which I talked about. And we had that primary market auction where the central bank was expected to roll over more than 52 billion naira worth of maturities at the Treasury bills market. But when you talk about that fixed income market, in terms of the bond segment of the market, it was bullish, as the average yield there dipped by 32 basis points to 14.2%. Now, investors had demanded the March 2027 as well as the March 2032 bond. Average yield there, it contracted at the short and the midterm, the short and the long end, while at the midterm, it remained flat. For the Treasury bills market, it was quiet. Average yield there remained unchanged at 11%. And then at the same time, the Treasury bills rate, it dropped to about 13.05% following the CBN's auction. So now to give us more details about that market, let's talk to Caleb Alimi, a fixed income analyst, a fixed income dealer and analyst at FSDH Merchant Bank. Thank you for joining us, Caleb.
Good morning, Anita. Thank you for having me.
Okay, now I want you to give your reactions, because first of all, we had a slew of fixed income analysts that had predicted that the strained liquidity position will affect demand and expected possible adjustment on the spot rates at the Treasury bills market. So can you give us more information about the primary market auction carried out on Wednesday?
Thank you. The primary market auction had a surprising, twist to it. Interestingly, the market opened up extremely positive on that day. We opened up at around 325 billion from the previous day of around 175 billion. So there was a lot of liquidity in the market, and that was made to chase the little security that was offered. We had about 51 billion maturing on the one-year paper. And the bids, interestingly, the bids at that auction, the total bids were around 722 billion. So we had the auction oversubscribed by more than 14 times. And that the DMO took advantage of that, the CBN took advantage of that. And we saw the primary auction stop rate, close down by 180 basis points from its previous stop rate. At the auction 2 weeks ago, it closed at around 14.84%. And then one-year paper at this time, yesterday's auction closed at 13.05%, largely because of the size on offer and the amount of demand that was out there. The 91-day and the 182 days remained relatively the same, but the biggest move has been on the one-year paper, where we saw, like I said before, about 180 basis point drop in the stop rate. We expect that will filter into the secondary market, because not a lot of people want that security, despite the fact that DMO sold 2 times the amount on offer. They have 51 billion on offer, and they sold over 100 billion. But the market is still, yearning for that paper. We expect that the demand, and due to the liquidity in the system, the rate continues to, shrink further and drop further, given the liquidity in the market.
Okay, thank you for that analysis, Caleb. Our fixed income market, we definitely will keep our eyes out on, particularly next week, where the National Bureau of Statistics will release the November inflation report. Now, let's move over to the unlisted securities market. In contrast to what we had for Tuesday, the market remained unchanged. Not much of activity carried out there. We had no gainer and no loser. So that's the reason why the market remained unchanged in contrast to what it had, the 0.99% decline that we had on Tuesday. So this is how the market turned out for the Wednesday's trading session. Now let's move over to the activity. In terms of activity, total volume of securities traded there, it declined by 94.50%, which is what you have here, 56,370 volume of securities traded. The total value there, just a paltry 1.3 million, while the total number of deals was 3, and only 3 stocks traded. So that is why that market remained more on the flattish end. But at the close of today's trading session, we'll see how that market turns out for all the markets, both the unlisted securities, the equity market, and the fixed income market. Yeah, the unlisted market has been
as other market, yes, as other market though. It's just that it's so obvious with them. Sometimes it's really quiet, and then we do have unchanged, you know, which hardly happens in other markets. You talk about the fixed income, you talk about, even when it's quiet, you still see a bit of movement in those markets. But this is a small market, so I guess...
Yeah, I think, let me just add some, my observation is, first, we were celebrating the 1 trillion naira level, which that market had crossed into, and we were expecting it to climb higher. But for profit-taking reason, the market has receded to, I think it is even lesser than 950 billion naira in terms of total capitalization.
I guess it's just the reality of the times, you know, that we're living in now. So if the big markets can get hit, then who says the unlisted market, which is the smaller one, would not get hit? But I guess investors could remain hopeful.
Well, some of them, at the same time, what they do is that sometimes they cross over, you know, because all these markets are interrelated.
I think the fixed income is, like the Treasury bills auction yesterday, getting more attention at this time.
Yes, it is. It is.
All right, thank you so much, Anita, for that.
Pleasure.
And as Anita walks out, Laddie Williams walks in and brings with him tidings from the crypto market.
I bring extreme fear tidings this morning.
I thought yesterday we had fear and we're just hoping that we will move further forward, not go backward.
I don't know, we're going backward this time, and it's at 25 points. Yes, extreme fear. It's still a fearful market. Investors still looking for direction at this point. All right, let's look at it. 25 points, extreme fear. That's what we have today. Worse than what we had yesterday, which was at fear at about 29 points, and we dropped back very deeply there to 25 points. Let's look at the market cap there. $840.24 billion is down 0.30%. We see volume traded $38.82 billion. That's up 3.56%. And Bitcoin dominance sitting at 38.49%. Let's look at the price of Bitcoin this morning. You see Bitcoin there holding that $16,816 support there, down 0.82%. It lost that 17K level yesterday. And we see volume traded, bigger volume, $19.35 billion compared to yesterday. Let's bring in Michael Inaji now, financial market analyst, to bring us up to speed. Hello, Michael. Great to have you.
Good morning, Letty. Can you hear me?
Yeah, I can hear you, Michael. Still about the SBF issue, FTX, exchange implosion, and he's supposed to come for a hearing on the 13th of December. Do you think he's going to attend that hearing? Because I'm hearing sound bites that he might not, you know, but we've heard that he has to actually attend that hearing. What do you think is going to happen?
Yeah, so it's looking pretty 50-50 at the moment. There was a tweet from the senator from California, Maxine Waters, the chair of the Financial Services Committee, and she basically said that there was a tweet where she said that she needs him to ideally come and testify. And then at some point yesterday, CNBC reported that Maxine Waters said that basically she doesn't need him to come. But later on in the day, about 6 hours after that, Maxine Waters directly replied to a thread where she was telling SBF to come to the interview. She said that the situation is rapidly developing. However, though, if she does need to use her subpoena powers, that she will use the subpoena powers. So it's really looking like Sam is going to have to come to that hearing because at the end of the day, Maxine Waters was he was basically seen with a lot with Maxine Waters to the point where she was blowing kisses at him for when he was doing his circuit around DC because he was one of the biggest donors. We remember throughout the course of this year, SBF went on a ton of hearings in DC. SBF was one of the most popular crypto faces in DC. We talked about him here numerously, about how many hearings he went on. So it's finally funny to see when he's in trouble that he doesn't want to go to those same hearings, almost like implicitly telling you that he's a foul of the law in what he did. So it's really interesting. The same guy that led a lot of the hearings, that moved a lot of the prices throughout the course of the year with good or bad news, with all the crypto bills, is the same one now that Congress is begging to come back. The truth is SBF over the last couple of days has been running a circuit over the media. He's been going through, he went to the Wall Street Journal, Deal Book Summit. He did a couple of Twitter spaces. He did the Good Morning America show. The truth is SBF had a Twitter spaces with an individual pseudonym called CoffeeZilla. And the guy has interviewed him about 3 times. But in the last 48 to 72 hours, there was an interview where basically they explicitly asked him, according to your terms of service and how you basically segregated funds, some users should not have had their funds affected anyhow if you were just doing margin trading versus siphoning the funds to your hedge fund. And so he explicitly asked them, did you commingle funds? And in all honesty, it sounds like SBF answered that question and finally told us what we needed to hear, which is like he did commingle funds in essence. So obviously it's not under oath. So he didn't perjure himself if in case the investigation did come out. But in terms of, he claims that he can go to Washington because he doesn't have all the information in front of him. He's trying to figure it out. But the amount of information this guy has given out in the last, all the Twitter spaces and all the talks he's had indicates to everybody that he does have enough information to do a hearing. By no means is he not ready to discuss this topic. However, though, Caroline Ellison, the CEO of Alameda, was spotted last week in New York. The people are saying that she most likely is looking for a deal from the state's attorney in New York. So it's a rapidly developing situation. The truth is SBF could land to the United States and immediately be arrested. So it's one of those things, if you were SBF, do you want to go back to the States and face immediate arrest? Because most likely he's looking at a long time behind jail if he's actually found complicit of a lot of his illegal actions.
But Michael, one question, Michael, with all that's, happening, if he actually attends the hearing or doesn't, do you think, users that have their funds stock on that exchange, do you think they're ever going to get those funds back?
I fundamentally believe there's going to be some kind of recoupment. I don't think it's going to be one-to-one. SBF has stated that FTX US users are going to get one-to-one funds, but he honestly could be saying that to avoid even more jail time. Because if he provenly commingled FTX US customer funds, then there's a higher chance that he's definitely going to go to jail for a longer time. So he said that he can make about FTX international users about 25% whole. So they can expect somewhere between 10 to 25 cents on the dollar. And FTX US users can get 100% on the dollar. So I do think there's going to be people will get their money back. But however, we've seen it take a long time. An exchange that comes to mind would be Mt. Gox. The people who lost their Bitcoins there still haven't gotten them back. It's been almost 10 years. So people will get their money back. However, though, it could be a very, very, very long time till that's arbitrated. So there is hope that these people will get made whole. But at the end of the day, it's something that could drag out for an entire decade based on on previous instances of bankruptcies of crypto exchanges going under.
Right. Well, we'll keep watching. I'm sure investors don't want to hear it's going to take 10 years to get, their funds back. But thank you so much, Michael Naji, financial market analyst. Thank you so much.
My pleasure.
All right, that was Michael there giving us the lowdown from the whole SPF FTX issue. If we look at the top also market cap there, we see it's mixed there. We see BNB down 1.33%, Cardano down 1.19%. We see XRP trying to start one kind of short-term rally there, up 0.89% at 38 cents. And we see eCash there, 89. That was less than 1 cent for eCash. And well, that's how the market is looking today. It's not much fun right now in this market.
Not much fun and scary news with that FTX and all that. And I know some investors will think, what happens to Binance? What if it spreads to this?
Exactly.
It's a scary thought for investors.
All other exchanges are on the watch list right now.
All right, Laddie, thank you so much. I'll see you at 1:30 for Business Incorporated. Okay, all right. So that's it on the program today. We'll have another one tomorrow. So wonder what we'll talk about. Of course, it will be something that's business. It will be something that is relevant and current. So you can be sure of that. Join me at 10 a.m. tomorrow for another episode of Business Morning. But 10 p.m. today during stock market reports, I'll give you a summary of how the market closed, the equities market. So do join me then. But before then, do make some money and have a profitable business day. I'm Ini John McQuan.